Something is happening to silver right now that the financial media is almost completely ignoring. And if you own a savings account, get a paycheck every month, or just live in this world and use money, what I'm about to show you directly affects your life, whether you know it or not. If you're interested in money, finance, or changing your financial future, like this video and subscribe right now, because what you are about to learn can change the way you see money forever. Let me start with a real story. A man named David, a 34-year-old teacher in a mid-sized city, worked hard his whole life. He was responsible. He saved money every single month. He did everything he was told to do. Put your money in a savings account, they said. Keep it safe. Watch it grow. And for years, David believed that. He watched his bank balance go up slowly, proudly, like a kid watching a plant grow on a windowsill. Then one day, he sat down and actually did the math. He looked at what his savings were worth in real terms, not the number on the screen, but what that number could actually buy him compared to what it could buy 10 years ago. And the answer hit him like a truck. His savings were shrinking. Not the number, the real value, the purchasing power, the thing that actually matters. And nobody had warned him. Not his bank, not his school, not the news, nobody. That moment David had, that gut punch of realizing the system he trusted was quietly working against him, that is exactly what this video is about. Because right now, something very similar is happening in the silver market. And most people are going to miss it completely. But not you, not today. So let's go back to basics for a second, because to understand why silver matters so much right now, you need to understand something simple about money that most people never learned. And I mean truly never learned. Not in school, not from their parents, not anywhere. Money, the paper in your pocket or the number on your phone screen, is not actually wealth. It is a representation of wealth. It is a promise, a ticket, a voucher. And like any voucher, its value depends entirely on how much the person holding the voucher book trusts the system behind it. Think about airline miles. You collect them, you save them, you protect them. But if the airline goes bankrupt tomorrow, those miles become worthless overnight. Not because anything physically changed, just because the promise behind them collapsed. Now, I am not saying currencies are about to collapse overnight, but I am saying they have been quietly, slowly, steadily losing their value for decades. And the mechanism behind that, the printing of more and more money, is something that has been accelerating in recent years at a pace that should genuinely make every working person stop and think very hard about what they are doing with their savings. But here is the uncomfortable truth most people never want to face. While your savings sit in a bank account earning 1 or 2% interest per year, inflation, the slow erosion of what your money is worth, has been running at 3, 4, 5, and even 7 or 8% in recent years. That means, in real terms, the average person's savings are losing value every single year while they sleep. The number goes up, the wealth goes down, and almost no one is talking about what that means for everyday people. This is where silver enters the story, and I want you to pay very close attention here, because this part changes everything. Silver is not just a shiny metal people make jewelry out of. Silver is one of the oldest forms of real money in human history. For thousands of years, literally thousands, before there were banks, before there were stock markets, before there were digital wallets and crypto exchanges, there was silver. Civilizations built their entire economies around it. Merchants trusted it. Kings stored it. Ordinary people used it in their daily lives. And the reason they trusted it was simple. You cannot print silver. You cannot create it out of thin air. It has to be dug out of the ground at great cost and effort. It is real. It is physical. It is limited. And that is the exact opposite of what paper money is today. Now, I want you to hold that thought. The idea that silver is limited and real, because I am going to come back to it in a few minutes and show you exactly why that matters more right now than at almost any point in modern history. But first, I need to tell you something about silver that almost nobody talks about, something that makes it completely different from gold, and something that the people who track these markets find genuinely alarming. Silver is not just money. Silver is also one of the most industrially critical materials on the planet. And this is the part where most people's minds get blown. Think about your phone. The screen you're probably watching this on right now. The solar panels on rooftops across the world. The electric vehicles that every car company is racing to build. The medical equipment in hospitals. The circuit boards in computers. The satellites in orbit above your head. All of them require silver. Not want. Require. Silver conducts electricity better than almost any other material on Earth. It reflects light better than almost any other material. It kills bacteria. It is used in water purification, in X-ray machines, in military equipment, in advanced electronics. And the demand for all of these things is not shrinking. It is exploding. Global solar panel production has been growing at a rate that would have seemed science fiction just 15 years ago. Electric vehicle manufacturing is scaling faster than almost any industry in history. The push for green energy infrastructure globally means that more silver is being pulled into industrial use every single year. And here is the part that should make your stomach drop a little. Silver mines are not keeping up. We are, right now, in a situation where the world is consuming more silver than it is producing. That gap between how much is being used and how much is being dug out of the ground has been growing. And when demand exceeds supply for any real physical thing that cannot be invented or manufactured out of thin air, basic economics tells you what happens next. The price goes up. And not just a little. But here is where the story gets even more interesting and more urgent, because there is something happening on top of all of this industrial demand that most people are not connecting to their own financial lives. Remember what I told you about money losing value, about how every year the purchasing power of your savings quietly shrinks while you sleep? Well, when people start to realize that is happening, when enough ordinary people wake up to the reality that the paper money system is quietly eroding their wealth, they historically do one thing. They run to real assets, physical things with real value, gold, real estate, and silver. And right now, there are signs that this shift is starting to happen. Not in some dramatic movie-style crash, but in the quiet, underneath the surface way that big financial shifts always begin. Smart money, the term people use for experienced, informed investors, has been quietly increasing its silver exposure. Central banks around the world have been buying physical precious metals at rates not seen in decades. And yet, if you turn on the mainstream financial news, you will almost never hear anyone talking about silver. They will talk about stocks. They will talk about crypto. They will talk about real estate. Silver? Almost never. And that silence, that curious, deliberate feeling silence, is itself one of the most important signals you need to understand. Because here's what I need you to think about. If silver were overpriced and overvalued and a bad idea, you would hear about it everywhere. The media would warn you off it. Financial advisors would shake their heads at it. But when something is quietly accumulating value while the mainstream narrative ignores it, that is historically when the biggest opportunities exist for ordinary people who are paying attention. Let me give you a real example that makes this concrete. Think about someone you know. Maybe it is you, maybe it is a family member who works a regular job, earns a regular salary, and at the end of every month tries to put something aside. Maybe it is $50, maybe it is $100, maybe less. And where does that money go? Into a savings account. Because that is what you were taught. That is the responsible thing to do. Safe and sensible. But now imagine that instead of putting that $50 or $100 into a savings account earning almost nothing, you had, 5 years ago, used it to buy a small amount of physical silver. Not to get rich overnight, not to gamble, just to own something real. Something that the industrial world needs more of every year. Something that cannot be printed or devalued by a government decision. What would that look like today? The numbers might surprise you. And more importantly, what would it look like 10 years from now, given everything we just talked about? I'm not going to tell you to put your entire life savings into silver tomorrow. That is not what this is about. But I want you to understand a concept that genuinely powerful wealth builders have understood for centuries, and that most ordinary people are never taught. The concept of protecting your wealth before you try to grow it. Most people are so focused on making more money, getting the promotion, starting the side hustle, chasing the next investment, that they never stop to ask a more fundamental question. Is the money I already have safe? Not safe in the bank might collapse sense? Safe in the my purchasing, power is being preserved sense? Because if you are earning 10% more per year, but inflation and currency devaluation are eating 15% of your wealth, you are moving backward while feeling like you're moving forward. And that is the exact trap that David, our teacher from the beginning of this story, fell into. And this is where everything changes. Because once you understand this concept, once you truly internalize that the goal is not just to accumulate a bigger number, but to preserve and grow real value, the way you see silver shifts completely. It is no longer just a commodity. It is insurance. It is a hedge. It is a piece of a smarter, more resilient financial life. Now, I want to get specific about what is happening in the silver market right now, because the urgency of this video is not just philosophical. There are real, measurable, current events that are creating what analysts are calling a perfect storm for silver. The first piece is something called the gold to silver ratio. This is a number that has been tracked by investors for literally centuries, and what it tells you is how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged somewhere around 15 to 1, meaning for every 15 ounces of silver, you could buy 1 ounce of gold. For most of human civilization, that was roughly the ratio at which both metals were mined from the earth. But right now, that ratio is dramatically higher, which means silver is historically very cheap relative to gold. Either gold is overpriced or silver is underpriced, or both. And when you layer on top of that the industrial demand story we already talked about, the solar panels, the EVs, the electronics, the case for silver being genuinely undervalued starts to feel less like speculation and more like a straightforward observation. The second piece is what is happening with global silver inventories. The stockpiles of above-ground refined silver that are available for delivery in the major commodities markets have been declining. Not dramatically in a single quarter, but steadily, persistently, in a way that professionals who watch these markets closely have been noting with increasing concern. When physical stockpiles shrink while industrial demand rises, the math eventually has to balance, and it balances through price. The third piece, and this might be the one that hits closest to home, is what is happening with currency globally. The last few years have seen levels of money printing and government debt expansion that, in historical terms, are genuinely extraordinary. Every dollar, every euro, every peso printed beyond what the real economy produces is a quiet tax on everyone who holds savings in that currency. And when enough of those currency units chase a limited physical commodity that the industrial world needs, the price of that commodity, measured in those currency units, rises. This is not a conspiracy theory. This is basic supply and demand. This is arithmetic. But most people never realize this part. They see the price of silver going up and they think silver is getting more expensive. But actually, what is often happening is the opposite. Silver is staying the same and the money used to measure it is getting cheaper. The metal is not changing. The yardstick is shrinking. And if your savings are denominated entirely in that shrinking yardstick, you are losing ground without ever moving. Let me take you back to a different kind of story for a moment. Think about a 22-year-old woman, let us call her Priya, who graduates university with no inheritance, no financial safety net, just a modest starting salary and a desire to build something for herself. She reads about investing and gets overwhelmed. Stocks feel complicated and risky. Real estate feels impossible on her salary. Crypto feels like gambling. And gold feels too expensive to even start. But silver? Silver she can actually buy. A single ounce of silver costs less than most people's monthly coffee budget. It is tangible. She can hold it. It does not require a brokerage account or a financial advisor or a minimum investment. She starts small, a few ounces at a time, whenever she has a little extra. Not a strategy that will make her rich overnight, but a habit that builds something real, brick by brick, over time. And the beautiful thing about Priya's approach is that it does not require her to be right about exactly when silver will surge in price. It does not require her to time the market. It just requires her to consistently own something real while the people around her are holding something that is slowly deflating. And over time, over 5 years, 10 years, 15, the difference between those two approaches tends to compound in a way that can genuinely change someone's financial life. Now, I need to be honest with you for a moment because this is not a video that is going to pretend there are no risks here. There are. Silver is volatile. Its price can drop significantly in the short term, and if you need your money in the next 6 months, silver is not the right place for it. Nobody should put money they cannot afford to have tied up into any commodity. That is just common sense. But for the portion of your finances that represents your long-term wealth, your future self money, the part you're not touching for years, the argument for having some exposure to real assets like silver has rarely been stronger than it is right now. And here is something nobody talks about in the mainstream conversation around personal finance. The advice most people get, save in cash, invest in stocks, trust the system, is advice that was designed for a world with relatively stable money, relatively low inflation, and relatively predictable economic conditions. That world existed for several decades in the 20th century, and it made certain strategies work well. But the world of the last 10 to 15 years has been different. Inflation has been more persistent. Currency values have been less stable. The link between working hard and building real wealth has frayed for a lot of ordinary people. And in that different world, the old advice does not automatically produce the old results. This is where most people fail without even realizing it. Not because they are lazy or irresponsible, but because they are following a map that no longer matches the territory. They are using strategies that made sense in a different era and wondering why they are not getting the results their parents got. And the answer is not to work harder or save more, though both of those things are still important. The answer is to update the map, to understand the world as it actually is now, not as it was 30 years ago. Silver, in this updated map, plays a specific and important role. It is not magic. It is not a guaranteed path to wealth. But it is a historically proven store of real value, a commodity with genuine and growing industrial demand, and an asset that ordinary people with ordinary incomes can actually access. That combination, real, in demand, accessible, is genuinely rare in the world of investing. And now I want you to think about something, and I want you to think about it honestly. If everything I have described in this video is accurate, the currency devaluation, the industrial demand, the tightening supply, the historical undervaluation, why is nobody in your life talking about this? Why is your bank not mentioning it? Why is it not the top story in the financial media? Part of the answer is simply that the financial system has a massive interest in keeping your money inside the system. Every dollar you move out of a savings account and into a physical asset is a dollar your bank can no longer lend out and earn money on. Every person who starts thinking about preserving their wealth outside the traditional system is one fewer customer fully dependent on the traditional system. The system is not evil, but it is self-interested, and its self-interest does not always perfectly align with yours. The other part of the answer is more complicated. Silver is not glamorous. It does not have the story arc of a startup stock that might go 10 times. It does not have the cultural buzz of cryptocurrency. It is not the kind of thing that makes for exciting headlines or viral social media posts. It is quiet, physical, humble wealth preservation. And in a media landscape built around excitement and engagement, quiet and humble does not get airtime. But quiet and humble, compounded over time, has built more lasting financial security for more ordinary people throughout history than almost any exciting, buzzy investment trend you can name. But what happened next in the global silver picture, in terms of where prices went after these conditions aligned historically, changed the financial lives of the people who were paying attention. Throughout history, when this particular combination of factors came together, industrial demand surge, currency pressure, historical undervaluation, tightening supply, silver went through periods of price movement that were dramatic and fast. Not every time, not on a schedule you could predict, but with a consistency that made people who understood the underlying dynamics feel, in retrospect, that they should have acted sooner. And that feeling, should have acted sooner, is the feeling I want to help you avoid, not by panicking, not by making reckless decisions, but by being informed, by understanding what is actually happening beneath the surface of the financial world you live in, by having a little more awareness than the person next to you who is just following the default script without ever questioning it. Think about what it would mean for your life 5 years from now if you started genuinely understanding how money works. Not the simplified version they teach in school, but the real version, the version where inflation is a hidden tax, where currency devaluation quietly erodes savings, where real assets have preserved wealth for thousands of years for a reason, where ordinary people with ordinary incomes, who simply paid attention and made consistent, informed decisions, ended up in a fundamentally different financial position than the people around them who never questioned the default. The difference between those two people is not intelligence. It is not income. It is not luck. It is awareness. And awareness is exactly what you're building right now by watching this. So where does this leave you? What should you actually do with everything you have just learned? The first thing is simply to take the knowledge seriously, not to panic, not to run out and make impulsive decisions, but to genuinely absorb the fact that your financial world is more complex and less safe than the mainstream narrative suggests, and that there are real, practical, accessible things you can do about it. The second thing is to start asking better questions. Not just how do I earn more, but how do I protect what I already have? Not just where should I invest, but what actually holds its value over time. Not just what is popular right now, but what has stood the test of thousands of years. The third thing is to do your own research. Look up the gold to silver ratio. Look up silver's industrial demand projections. Look up what happened to silver's price in previous periods of high inflation and currency stress. Look at what central banks are doing with physical precious metals right now. The information is all out there, and once you start looking at it through the lens of what you have learned today, it will start to form a picture that is both sobering and full of opportunity. And the fourth thing, maybe the most important thing, is to start thinking about your financial life in terms of real value, not just numbers on a screen. Because the number on your screen can go up while your real wealth goes down. And the only way to protect yourself from that quiet, invisible erosion is to own some portion of something real, something that the world needs, something that cannot be conjured out of thin air by a government decision or a central bank meeting, something like silver. David, our teacher from the beginning of this story, eventually did figure it out. It took him longer than it should have, and it cost him some of those years of quietly shrinking purchasing power. But he changed course. He started understanding money the way it actually works, not the way he had been told it works. And the difference that made, not overnight, not dramatically, but steadily and meaningfully, was the difference between feeling like the financial system was always somehow running faster than him, and finally feeling like he was building something real that could not be taken from him by inflation, by policy changes, by the invisible forces that had been working against him for years without his knowledge. That shift from financial confusion and quiet anxiety to informed confidence and deliberate action is available to every single person watching this right now. It does not require huge income. It does not require a finance degree. It does not require connections or luck. It requires awareness, curiosity, the willingness to question what you have been told and to seek out the real picture. And the real picture right now when it comes to silver is this. There is a metal that the industrial world needs more of every year, that the financial world has historically used as a store of real value for thousands of years, that is currently priced at levels that look historically cheap relative to gold. that faces a supply deficit that mathematics suggests cannot persist indefinitely without price impact, and that ordinary people with ordinary incomes can actually access and own. That picture, laid out plainly and simply, is one of the most compelling cases for attention that exists in the financial world right now. The people who understand this are quietly positioning themselves. The people who do not are continuing to hold their savings in accounts that lose real value every year, watching the financial world through the simplified, sanitized lens of mainstream narratives that were never designed to serve their interests most effectively. Which of those people are you going to be? That is not a rhetorical question. It is a real decision, and it starts right now with what you do with the awareness you have built in the last 18 minutes. The biggest financial regrets are never about the risks people took. They are about the moments of clarity they had, moments exactly like this one, where they saw the picture, understood the stakes, and then went back to their normal routine without changing anything. Do not let this be one of those moments for you. If you learned something new today, make sure to subscribe to Money Insights and like this video. More powerful financial truths are coming next.